The SPDR Portfolio Long-Term Treasury ETF, SPTL, is an exchange-traded fund, ETF, that aims to provide investors with exposure to long-term U.S. Treasury bonds. It is managed by State Street Global Advisors, SSGA, one of the largest asset managers in the world. One of the main benefits of investing in SPTL is the potential for steady, long-term income. Long-term Treasury bonds, which are issued by the U.S. government and have maturities of 10 years or longer, tend to offer higher yields than shorter-term bonds. This is because investors are willing to accept lower returns in exchange for the stability and security that come with lending to the U.S. government. In addition to the potential for income, SPTL offers investors the opportunity to diversify their portfolios. The fund invests in a broad range of long-term Treasury bonds, which can help to reduce the overall risk of an investment portfolio. This is because the performance of different types of bonds tends to be uncorrelated, meaning that they do not move in lockstep with each other. One potential risk of investing in SPTL is the possibility of rising interest rates. When interest rates rise, the value of existing bonds tends to fall, as new bonds are issued at higher rates. This can lead to capital losses for bond investors. However, the impact of rising interest rates may be more muted for long-term bonds, as they are less sensitive to changes in interest rates than shorter-term bonds. Another risk to consider is the credit risk associated with the bonds held by SPTL. While the U.S. government is considered to be a highly creditworthy borrower, there is always a risk that it could default on its debt. This risk is generally considered to be very low, but it is something that investors should be aware of. In terms of fees, SPTL has an expense ratio of 0.07%, which is relatively low compared to other ETFs. This means that investors will pay a small percentage of their assets each year to cover the costs of managing the fund. Overall, SPTL is a good option for investors who are looking for a way to gain exposure to long-term U.S. Treasury bonds and potentially generate steady, long-term income. While there are risks to consider, the fund offers the potential for diversification and low fees, which can make it a valuable addition to a well-rounded investment portfolio.